Hello traders, it's Friday, September of 8th, and this is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the major market movements of Thursdays. So the first instruments we're referring to the dollar index in 4-hourly charts. So the US dollar index, which measures the greenback strength against the trade weight basket of 6 major currencies, it was fell by 0.56% to 91.69. It was pressured by the sharp rise in the euro, additional with the initial jobless claims data that unshot expectations. So according to the Labor Department said on Thursday, initial jobless claims in the period running from August 27th to September 2nd, it was surged by 62,000 to 298,000. So it was reaching the highest level since spring of 2015. And the euro, the single currency is pair of some of its gains against the dollar after hitting a nearly 2-week high on Thursday. So with the pair EUR-USD jumped 0.76% to trade at around 1.2008, following European Central Bank President Mario Draghi's comments that policymakers would decide on temporary stimulus in October. So Mr. Draghi, however, expressed concerns over the recent rally in the euro and saying that the currency strength represents a source of uncertainty which requires monitoring with regards to its implications for the medium-term outlook for price stability. So stronger currency usually lead to an increase in imports, which tends to weigh on the pace of inflation. So Draghi's comments came after the ECB capped interest rates at record lows and confirmed that asset purchase would continue at least until December. While the Canadian dollar extended gains, with the pair USD CAD fell 0.65% to trade at around 1.2145 as the Bank of Canada unexpected decisions to hike rates on Wednesdays continue to support a move higher in the loan. Having a tad in commodities markets, the gold price was surged on Thursday, rose by $11.10 or around 0.83% to trade at around $1,350.99 a troy ounce. So this is on the back of a weaker dollars following data showing weakness in labor markets, but gains were capped as expectations grew that the European Central Bank is moving closer to tightening monetary policies. So dollar denominates commodities such as gold are sensitive to move in the dollars. A dip in the dollar makes gold cheaper for holders of foreign currency and thus increase the demand. As for the oil price, it was mixed on Thursday, and with the West Texas Intermediate crude was lost 7 cents or 0.1% to settle at $49.09 per barrel. So this is as the restart of US refiners after Hurricane Harvey was countered by a threat of Hurricane Irma. So the US Energy Information Administration, the EIA, said on Thursday the US weekly crude stocks was increased 4.6 million barrels last week, which topping analysts forecast for a 4 million barrel built in a Reuters post. So reflecting the impact of Harvey, which hit the Gulf Coast on August 25th, the EIA says US oil refinery utilization rates slumped 16.9 percentage points to 79.7% last week, so which is the lowest rate since 2010. So the US Gulf Coast utilization rate was dropped to 63.4%, which is the lowest rate since the EIA began collecting the data in 2010. So the US Gulf Coast facilities were slowly recovering from the devastating effects of Harvey, which hammered Louisiana and Texas almost 2 weeks ago, shutting key infrastructures in the heart of the US oil and natural gas industry. So as of Wednesday, about 3.8 million barrels of daily refining capacity of 20% of the US totals was shut in, and thought a number of refineries and petroleum handling ports were restarted. So at the same time, prices were weighed down by fears that Hurricane Irma in the Caribbean could interrupt crude shipments in and out of the United States. So in the week after Harvey hit the US crude exports was dropped 750 149,000 barrels per day to 153,000 barrels per day. So Irma barrels into Caribbean islands overnight with wind speed ups to 185 miles per hour and was heading for Florida. So fuel shortage were reported in Florida as retailers struggled to keep up with demands from customers, and many of whom were evacuating and filling tanks ahead of the storm's landfall expected this weekend. So another Atlantic storm, Jules, is following on Irma heels and is expected to gain strength and intensify into a major hurricane by Friday. So according to the US National Hurricane Center, yet another Hurricane Katia is in the Gulf of Mexico. So now let's have a look in the highlighted economic data that's on Thursday, as well as the focus data and event for today. So yesterday, Thursday, Australia was released the retail sales for July, and it was at 0% growth, which disappointed the focus of economists. Alright. So as for the European Union side, the European Central Bank was decide its latest deposit facility rate and the interest rates, as well as conducted at a press conference after the interest rate decisions. Right. So the both data of deposit facility rates and interest rates was remain the same, with negative 0.4% for deposit facility rate and 0% of interest rate decisions. Okay, so besides of European Union, Canada was released the I-Rate PMI, the Purchasing Manager Index, for August, and it was at 56.3, which disappointed the economist forecast as well, which is at 61.3. So the last data on yesterday is the crude oil inventories, and it was showed an increase of 4.58 million, okay, which is much more than the forecast of economists as 4.022 million. Right. So as for today, Friday, Japan has released the gross domestic product for second quarter during the morning sessions of Asia trading hours, and it was at 0.6% growth. So later today we can focus on the data which will be released by the United Kingdom, which is including the manufacturing productions for July, and it is expected to be better from previous 0% growth to 0.3% growth. Right. So during the North American trading hours, Canada will release the employment change for August, and it is expected to be better as well. And the last data tonight is the US Baker Hughes oil rig counts. Okay, so the previous figure was at 759 of rig in the United States, right? So any figure that's higher than the previous figures is considered negative to the crude oil price. Otherwise, lower than the previous figures is considered positive to the crude oil price. So now we're gonna take a look for the technical analysis, and the first instruments we're referring to the GBP USD in the daily charts. Alright, so GBP USD remained traded in an uptrend, and it was surged above the both moving average lines. So additional with the both moving average line which pointing upwards and the bullish signals showing the MACD indicator, so the pair GBP USD is suggested to move further higher after the price closing above the resistance level of 1.314. And the next resistance level we can refer to 1.326. The single currencies remain traded in an uptrend against the US dollars, but if it was failed to close above the resistance level of 1.20600. But however, referring to the both moving average line which expanding upwards and the bullish signal showing the MACD indicator, the pair EUR-USD is expected to move higher after closing above the resistance level of 1.206. So the next resistance level we can refer to 1.22 as the long-term target. As for the Kiwi, it is remained traded in the downtrend structures against the US dollar, but it was lost momentum since the price surged above the Fibonacci retracement level of 23.6, or at the price of 0.723. So currently it considered being retracement periods, and thus it is expected to move slightly higher in short terms. So with the price closing above the Fibonacci retracement level of 50, or the price of 0.734, is a signal for shifting trend directions to become uptrends. So the next resistance level we can refer to 0.739. and the Aussie remain traded in an uptrend structures against the US dollars, with the both moving average lines remain expanding upwards. So additional with the bullish signals shown in the MACD indicator, the pair AUD/USD is suggested to surge higher after the price closing above the resistance level of 0.812. So the next resistance level we can refer to 0.828. Having a look in the safe haven Japanese yen, it is remain traded in downtrends, with the pair USD JPY traded below the support level of 108. So this was taken as a signal for continuations of downtrend, and it is expected to move further lower towards the next support level at 106 as the long-term target. As for commodities, the gold price remains traded in an uptrend, so it has surged above the strong psychological resistance level at $1,300 a troy ounce. So it's a signal for it to move further higher with stronger momentums. So the next resistance level we can refer to $1,375 a troy ounce. So looking into oil price, with the West Texas Intermediate, which remain traded in uptrends, and currently the price is hovering below the recent high of $49.40 a barrel. So a price closures that's above $49.40 of a barrel is a signal for it to continue its uptrends and move further higher towards the strong psychological resistance level at $50 a barrel. So the both moving average line remains expanding upwards. Additional with the bullish signals we show in the MACD indicator, was supporting the upward momentum as well. To date, please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.